Today we'll be talking about Meta stock, the most recent performance of the business, and whether it's too late to buy the stock after its impressive 400% run, or whether investors can still expect a satisfying return. So without further ado, let's get started. Alright, Meta is all over the news at the moment because the stock has performed so spectacularly well over the last couple of months. And to be fair, the business is also running at full steam. And this was once again confirmed now that Meta reported its most recent quarterly results, its Q4 numbers. And in this video, we are going to discuss not only the most recent business results of Meta, but also the newly announced dividend that caught many investors by surprise. And maybe most importantly, we'll have a look at Meta's valuation and discuss what kind of returns investors can reasonably expect going forward. So let's take a look at the first chapter, the business performance. And before we do that, here's a little disclaimer. Meta, as of today, is my largest position, and I'm sure I'm biased to some extent. I have no plan to sell the stock at the moment, but I might change my mind at any point in time. So let me just put this right out there. And yeah, what can I say? Let me just quote what the Twitter user Mostly Borrowed Ideas wrote in a recent write-up on Meta's results. He wrote, "The stock's volatility in both directions has been nothing short of dizzying for investors. From a 75% drawdown in 2022 to plus 400% from the bottom in just 15 months, there was never quite a dull moment for Meta's shareholders." Yeah, and I also have to say that Meta has been one of my most successful investments ever, especially in absolute numbers. And I think it's just a very interesting case study that you can learn a lot about investor behavior in particular. Okay, let's get back to the quarter, finally. So Meta posted very good growth. Revenue grew by 16% year over year. Meta's operating margin grew 62% year over year. The company beat both estimates for this quarter, but also analyst expectations for the next quarter. So they beat the guide for the next quarter by almost 5%. Meta is fully back in profitability mode. The operating margin of the business now stands at, I think, 42% and has absolutely been trending in the right direction over the last couple of quarters. And I guess that profitability is due to Meta's newly gained cost consciousness. Also keep in mind that Meta laid off almost 25% of its workforce around a year ago. And all of these measures are finally starting to show up in the numbers. And not only is Meta highly profitable on an accounting profit basis, like the operating income, but also it's producing real cash. Meta's free cash flow margin, if I'm not mistaken, also stands at above 40% at the moment. All right, then in terms of business performance, I think every investor in Meta stock needs to be aware of the key drivers of the business over the long term. And by the way, that's true for any stock you own. I always encourage people to be aware of the 2 to 3 key long-term drivers that will determine whether the investment will be successful or not. And for Meta specifically, it's primarily an ad business. There are 4 variables investors need to track. So the first one for Meta specifically is the number of users. And people have been claiming that Meta will not be able to grow its user base going forward because it is already so massive. Billions of people are using Meta's products. But to everyone's surprise, the business just keeps growing. So as of the most recent quarter, the family daily active people, DAP, was 3.19 billion, which represented an increase of 8% year over year. So I personally find it highly fascinating that despite its size, Meta can grow at such high rates. So basically they added, almost 300 million people year over year to the apps. Then the second variable to be aware of is the average revenue per user, or the price per ad. And the price per ad rose by 2% year over year, also beating analysts' expectations because they expected the ad prices to decline 4% year over year. Then keep in mind, we've got ad pricing, number of users, and another variable that will determine how much cash Meta is printing is the number of ad impressions that users of Meta's apps are seeing. And arguably, this is the most important growth driver at the moment. So ad impressions delivered across all of Meta's apps increased by 21% year over year. And similarly, and that's the fourth variable, the usage time is also growing at quite a high clip. So just to provide some numbers here, Meta set a 2-year record for its daily average users as a percentage of its monthly active users, which is basically direct evidence of the engagement within the users growing. Another very interesting statistic that I came across is that there are, as of today, 3.5 billion reshares of Instagram and Facebook Reels. And finally, one should also point out that the less talked about apps WhatsApp and now Threads as well are also growing at quite a high clip. So Instagram CEO Adam Mosseri actually shared on Threads that there are now 130 million monthly active users on Threads. And Meta has also shared that the community feature provided by Meta and WhatsApp specifically has also been increasingly adopted by more and more people. And this is actually something I also use in my mentorship program. So we have a community. Within the community, there are different groups to talk about. And I think that's just a great feature, allowing you to get in touch with people and have conversations in a more structured way. And we're almost done with the business side of things, so please bear with me. Then we'll talk about the dividend and Meta's valuation. But finally, let me highlight that during the earnings call, Mark Zuckerberg spent a good amount of his overall talking time talking about AI and the impact on the business. So what he did here is he first of all laid out his long-term vision. You might want to listen to that call yourself, but he was frequently speaking in 10-year terms, which is music to my ears because you very frequently hear company executives talk about the decades ahead. They are oftentimes much more focused on what's to come in the coming quarter and the next 1 or 2 years. He was justifying the very aggressive chip capital expenditures. So to quote him here, he said, "After underspending on Reels, I decided that we should build enough capacity to support both Reels and another Reels-sized AI service that we expected to emerge to avoid that situation again. The decision at the time was controversial, but I'm so glad we made it." Yeah, what is the impact of AI going to be on Meta's business? Well, in the short term, it's very clear. It's going to improve the experience of Meta's customers. It will improve the ad efficiency. It will also make the creation and automation of ads much easier. And longer term, I think that is something that Zuckerberg also highlighted on the call. The impact is much harder to predict. Meta is trying to become a leader in the Gen AI field. He talked about why they specifically chose the open source model. I would argue, generally speaking, the business culture at Meta is that they are first trying to reach scale. So as I just said, they try to build the best Gen AI technology on the market. And once they have reached broad scale and adoption, they will figure out monetization later. And I'm sure there will be many ways to monetize AI in the future, which we probably cannot really predict today. Okay, I think that's a fair summary of where our business is at the moment and where they are heading in the coming years. Let's talk about the announced dividend, which caught many investors by surprise. And to be fair, I didn't expect this at all. So let's start with the facts. So Meta's board approved a dividend. That dividend represents a dividend yield of around 0.4% based on Meta's current share price. And it's going to be paid out quarterly. So it's a 50 cents dividend for each share. And to be fair, I'm not sure if investors should celebrate it, because if you've watched some of my past videos, you will know that I'm generally speaking somewhat critical of a dividend. I don't think they are a bad thing and a bad form of capital allocation per se, but there are a few drawbacks, namely double taxation, the lack of flexibility that comes with it, because many executive teams feel married to the dividend they pay out. And maybe most importantly, the money paid out to investors is money that is not reinvested in the business. So it is now your duty to find attractive forms of capital allocation where you can put the money and earn a good return on it. And I just prefer it if the business still has capital allocation opportunities within the business and then earns a high return on those reinvestments internally. And so to some extent, the fact that Zuckerberg now pays out a dividend, I think it's $5 billion in total. So that's around, I guess, 1/8 or 1/10 of the free cash flow Meta will generate over the next year. Well, this limits Meta's growth going forward because ultimately the sustainable growth rate for business will always be the reinvestment rate, which now is not 100% for Meta anymore, multiplied by the return you earn on those reinvestments. But to be fair, I think Zuckerberg probably realizes that Meta is quite a mature business now. They will not be able to grow top line and profits at a rate, say, north of 30%. And they may not actually need a 100% reinvestment rate to achieve satisfying returns for shareholders. Also, to put the $5 billion annual dividend into perspective, Meta's board of directors also authorized another $50 billion share buyback program. So I think this helps you kind of put it into broader context as well. Now, in terms of the advantages of the dividend, one should also highlight that it makes Meta stock more attractive for a broader range of investors. So both institutional investors who might have restrictions and might only be able to invest in dividend paying stocks. And also, I think there's quite a broad base of retail investors who only focus on dividend paying stocks, which, well, I've criticized in a couple of videos of mine, but nonetheless, there are millions of retail investors who only invest in dividend paying stocks. The dividend growth investing community is quite large. So I think Meta might become the new darling for those investors. And just to wrap it up here, I could see Google and Amazon also announce a dividend fairly soon. So that's kind of a prediction from me for the next, say, 24 months. And let's wait and see. All right, final chapter. Is it now too late to buy Meta's stock? And I have a couple of interesting thoughts on this question. So first of all, let's have a look at the current multiple Meta is trading at. So Meta is trading at a next 12-month operating income multiple of 19 and trading at 26 times the cash flow, the free cash flow the business will generate over the next 12 months. What you have to realize, and I actually found an interesting chart on this, is that a large chunk of the return Meta shareholders enjoyed over the last 15 months. So as I said, I think the returns are in the range of above 400% if you bought at the exact bottom. Well, a large extent of that return actually comes from an expansion of the multiple. I also shared on Twitter the other day how I was thinking about Meta's valuation pretty much at the bottom of late 2022. So back then the company was trading at close to 6 times the operating income of the core business, the core ad business. And I just shared the current multiples, and that's not just the core business. Reality Labs obviously depresses those profits a little bit, but obviously the multiple has increased significantly here and has been a major driver of the stock's returns. And with those increased multiples, obviously there is increased risk now. Let me just show you this chart here. So I still hold all of my Meta shares, and as of now, I have no immediate plans to sell or trim my position. However, what I will say is that when the perceived risk is low, and I feel like everyone has been praising Meta over the last couple of weeks, the actual risk is actually high. And when the perceived risk is very high, just like in late 2022, the actual risk is actually much lower. So what I will say is that I feel a little less comfortable holding Meta today than I did when the stock was trading in the $100 to $150 range. Now, having said this, I think Meta, despite its spectacular run, can still deliver satisfying returns for investors. Let me just outline how I think about Meta's valuation in very simple terms. So basically, the return you can expect from a stock is going to be its free cash flow yield plus the growth of the profits of that business, assuming there's no change in the valuation multiple. And so if we assume Meta's multiple will stay the same, and the free cash flow yield at the moment is around 3%, a little higher. And if you now look at the earnings per share growth estimates of analysts, you will see that those are above 10% a year. So around 3%, let's say 3.5% of free cash flow yield plus say 10 to 15% in growth will actually give you very satisfying returns. So I could totally see Meta's stock to continue to deliver returns of around 15% for years to come. But of course, if the valuation multiple compresses, there's a lot of downside too. So let's say the free cash flow multiple goes back from 26 to, 17. That's already roughly ballpark 33% headwind. And I think it's important to be aware of this. However, let me also be very clear. I just said I have no intentions to immediately sell the stock at the moment. I think at a multiple of around 26 times next 12 months free cash flow, Meta stock is probably fairly valued. I wouldn't be a buyer here just because I want to be very demanding when it comes to buying new securities or adding to my position. And I don't think we are in a price range that satisfies or fulfills that criterion. But nonetheless, I don't think Meta is in any way overvalued. So for now, I'll just sit on my shares, let the business do its things, let Zuckerberg execute his long-term vision. And just to wrap it up and to get back to the question of the video, the title of the video, I think good returns are still possible, but there is more risk right now than there was around a year ago. All right, finally, I want to talk about this little book here. It's called Why Value Investing is Poised for Greatness. It's a relatively short book, around 100 pages. And I think if you read it, you will develop a very good understanding of what an intelligent value investing framework and process approach can look like. I share it for free online. All you have to do is you have to head to Twitter, follow me, send me a DM, or do the same on Instagram. And I'm happy to provide it as an ebook, of course, for free with you. I just want to put this out there. And with that being said, I'll wrap it up here. Talk to you soon. Bye.